Hello Sector Watchers, welcome to the show. This is the 122nd episode of Sector Spotlight for Tuesday the 12th of April, and I'm recording it on Monday the 11th. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. As usual, if you want to reach out, please use any of the handles on the screen. And for those of you who have written to me, I've got a massive backlog. You will get a reply, but it may take a little while, especially the ones that have questions that I really want to answer properly instead of, like just 2 lines. Anyway, just so you know, I didn't forget about you. For today, we will have our usual overview of what's happening in asset classes and in sectors. My plan is to take a little bit more time, spend a little bit more time on the sectors, and then move on to the sector rotation model and see where that leaves us at the moment with regard to general market conditions, position of the economy, the economic phase, etc., etc. See if we can get a handle or some guidance about what's heading our way. That's it. Let's get started with Sector Spotlight. Here we go with rotation of sectors. We have the daily RRG on the right hand side and the weekly RRG on the left hand side. If we take a quick look on the daily rotations, then we actually have a pretty clear picture for last week. We have DJP and GSG shooting off into the lagging quadrant. We'll get back to that when we talk about the weeklies, but they are basically continuing their pause, their corrective move. And then we have SPY rotating back into the weakening quadrant, coming from leading, basically giving up a little bit of its strength last week. Real estate, V&Q, is moving further into the leading quadrant, and that very much has to do with the fact that yields continue to rise. And that is visualized with the tails of pretty much all fixed income stuff, GOV, LQD, HYG, moving into improving from lagging, and also the US dollar is again picking up strength. And if we bring that to the weekly, if we combine that, if we connect those tails to the weekly tails, then we see that the commodity tails, DJP and GSG, are still well inside the leading quadrant, so they're still in very strong relative uptrends, but they're going through a break, they're going through a pause, and that's exactly what that is. That's exactly what those 2 tails are showing us. That's the result of the weakness that you see here in the weekly. These are very high levels in terms of RS ratio, so it's very, very unlikely that this is the beginning of a new downtrend or a trend reversal. I pretty much judge this, so basically the combination of very strong weeklies and weak or weaker dailies as a pause within the longer term uptrend. Now I'm going to take those 2 off to better visualize what's going on the weeklies here. So here you see V&Q rotating back into the leading quadrant. That's coming back in line with the daily tail, or the daily tail. Weekly tail is getting back into into leading, and the daily tail is doing the same. In sync, strength for real estate. If you look at SPY, you see that the improvement of SPY on the weekly is still there. So that's going to be interesting to see how that plays out, whether this rotation, the weekly here, is a little break and it will rotate back up to leading, basically supporting a further rotation back up for SPY on the weekly. And then obviously the same will happen on the opposite side for GOV, HYG and LQD, where we can have a same rotational pattern. Bear in mind that this is all relative. The VBINX benchmark chart is still weak. We looked at that last week. That is actually rolling over. That's starting to move in a downtrend. So this is all relative, and the fact that SPY so stocks are outperforming bonds only tells us something about the relative strength of stocks versus bonds. It doesn't say anything about the absolute price move for the stock market. We're going to look at the individual charts in a minute, just so you know. This is all relative. US dollar continuing to starting to pick up strength here again, and you can see that on the weekly tail. The weekly tail for the US dollar is really, really strong. Lost some momentum over the last 2 weeks, almost vertical. Pretty much no loss of relative strength versus VBINX, only relative momentum. And with strength picking up on the daily tail, I believe that the overall strength for the US dollar versus the rest of the world currencies is still in play. Now, if we look at some of the individual charts, and let's start with the US dollar. We had this consolidation period right here. That was causing that little down move here. That's what you see on the RRG. This vertical move down is the loss of relative momentum as shown here by the RRG lines. As it's now, it seems to be breaking out of its already rising channel, so I wouldn't be surprised if we get some sort of an acceleration in the strength of the US dollar. But we are running into overhead resistance at levels around 101, 102 for the dollar index. If we translate that to euro dollar, then you can see the same. 108 is a very important level. That's the most recent low that we had a couple of weeks ago. That was right here. And just below that is 106. There was a little snap down, little trip here in the start of 2020. I think the real support level is around 108. There's much more here, but the extreme was 106. So 108 is the first one I'm looking at. 106 is the second one. If those go, then we are looking at 103, and after that, it's a pretty big gap down for euro dollar. So first 106, 108, 108, 106. Sorry, other way around. But then, if those levels break, that would have a very, very, very serious impact. I think we have to assume that the dollar will start to weaken again once we get to this very serious support level around 103, 104. That's about 7 years old. 1, 2, 3, 4, 5, 6, 7 times touched. So that's a very serious level that we need to keep a look at, to keep looking at. Let's talk about the stock market. Let's talk about SPY. Here is the weekly chart of SPY. We discussed the 460 level as being important overhead resistance level. That was touched and broken 2 weeks ago. The high was 462.07. So yes, technically we took out that previous high, but the reversal was very swift and very clear after that, and you can see that on the daily version. Market is open right now. We're trading around 441 on Monday the 11th. And as you can see, we already have a new series of lower highs and lower lows starting on the daily chart. So I am going to make this a sideways move on the weekly, but we're moving lower again on the daily. And I think we should be prepared to see 415 again. The first important level will be around 440, 43974, 440. If that's taken out, then it's all the way down to 415 again. So keep a close eye on that. Looking at some of the individual charts, I think the strongest signal, and last week's title was about that the threat was coming from the bond markets, and here you see it. And I got to be honest, when I drew this head and shoulders pattern somewhere around here, actually where the dashed line is, that's where I started labeling this pattern. When I drew those lines, when I watched that, I thought this is a very nice setup. This is a very nice move. Very big head and shoulders, very reliable. We can work with this for quite some time. That was my thought. We'll be looking at this chart for quite some time before it reaches the target of 103. And look at this now. Here we are. I remember very vividly. It's like, what is it? 10 weeks ago, 8 weeks ago. I thought it would take much longer, but this is a very rapid decline in bonds. And as a result, we see a very rapid rise in yields. And so the target here based on the pattern is still 3% or 103 in terms of IEF. But I did a sneak preview and looked at what happened, what is behind all of that, and then you see this. Then I think the next big one, and that's a real big one, is around 100 in IEF. So there's still some way to go. 103 is the first target, but after that it's about 100, and that's pretty weak. I think that's a statement by the market. So that's that. Quickly, LQD, this is corporate bonds. They're taking out the previous low. That's going lower. High yields doing the same about this week. And here's the yield curve. We're now flat. We're around 0.19. We have not inverted yet, but we are very close to an inversion. And an inversion of the yield curve very often is seen as a prelude to a recession coming. Let's continue with sectors. Interesting week last week. If we look at the daily RRG on the right, we can see that, especially on the tails, quite some long tails here, and they're all defense. So here is staples, this is real estate, this is utilities, and this is almost the same. So like healthcare and real estate are on the same path. So this is real estate, this is healthcare, and this is real estate. They're almost identical. The thing is, these are all defensive sectors. So last week was all about defense. If we look at the more offensive sectors, now we have technology, discretionary, rotating back down. We have industrials, financials, energy. They're picking up this only for today. They're picking up a little bit, but they moved into the lagging quadrant. Communication services. Remember, this is maybe the weakest sector that we've seen over the last few months. Has peaked into the leading quadrant at very low momentum and a very short tail. And given the position of XLC's tail here on the weekly, way to the left, I think this is a hiccup. This is a recovery within the longer term downtrend. Let's take a look at the energy tail. Energy here is coming down. That's going through a pause, and if we look at energy here, you see that's been weakening. It's now starting to pick up. Again, with energy being where it is, way to the right, this is a little pause within the longer term uptrend for energy, because that trend is still very, very strong. So I'm gonna, just what I did with commodities, I'm gonna tick this off and redraw the chart here. So we've got a better angle, a better view. And then we have utilities pointing to the right, now in sync again with the daily tail. We have healthcare with a healthy tail moving into the leading quadrant. And as I shown you earlier, supported by the daily. We have materials, that's an interesting sector, starting to pick up and move into the leading quadrant. And if we find materials here, you see that it is starting to rotate back up. It's hard to see, but we have this moving in, down, and now the last notch today, it starts to travel at a positive RRG, heading back into the leading quadrant again. So it's getting back in sync with its weekly tail. Then we've got real estate doing really well in this rising rates environment. And then we have industrials, which is still inside leading, but rolling over and losing a lot of relative momentum, very close to the benchmark. So doubtful what that's going to be, and the daily is already signaling a relative downtrend. So sort of in limbo with regard to the industrial sector. We discussed communication services. Staples lost relative momentum, and if you look here, then it's starting to pick up again. So there's a very good chance, especially given the strong tail here, that this rotation, this weekly tail, might hook back up, because the improvement here is very rapidly. So maybe we don't even see that nice rotation through weakening and back there, but we see this hook back up almost as if it's anti-clockwise back into the leading quadrant. Financials losing strength here and already in lagging on the daily. And then we have the heavyweights, discretionary and technology, both inside the lagging quadrant. Technology already starting to lose relative strength again, and that's pretty much in line with what it's doing here on the daily tail, and I expect consumer discretionary to start doing the same this week or next. That's about the rotations that we have for the sectors. We're going to go through the individual charts, go over all of them. And the reason I'm doing that is to position them, to make you aware of that position, and then combine that, connect that to the sector rotation model that we'll talk about later in the show. So if we start with materials, then obviously the price chart is not all that. It's not bad. It's in a sideways range. But the good stuff is in the relative strength. Relative strength for the materials sector, and you can see that with the tail moving into leading, is really, really good. Communication services, then it is weak, and it will remain weak, and you see that the price chart is weak, and it's a sideways move in the RRG lines. RS ratio is still at a very low level, so this is still a strong relative downtrend versus the S&P 500. Don't expect any outperformance long term from communication services. Remember, 2 weeks ago we talked about the seasonal pattern for communication services, and that's actually pretty good. So I can't wait to talk about the new seasonal and look back at what communication services has done for the month of April. Here is energy, no doubt about it. Relative strength very good, price very good. If we look at financials, that's also sort of a sideways move here. And you see that the relative strength has trouble breaking higher. The RRG lines are starting to roll over, and that's reflecting, responding to that tail that's moving lower on the RRG, where XLF is actually inside the weakening quadrant. If we move to consumer staples, that's actually breaking to new highs. That's very positive, and you see the relative strength is actually very supportive of that. That's one of the stronger sectors. Market is playing defense right now. Here we've got technology, market sideways, downtrend if you wish, out of that uptrend for sure. Back below its former resistance level, which should have acted as support. Did it for a little while, but couldn't keep it, and it's now moving lower in terms of relative strength. That's what you see right here. XLRE moving to new highs in terms of relative strength, or moving above its resistance. So that's getting stronger in terms of relative. The price chart is not that good. We're still, we dropped out of that rising trend channel. Looks as if we're going to set a new lower high, but in terms of relative strength, real estate is one of the better sectors. Here we got utilities. We all know that, very strong, broke out to new all-time highs. That relative strength is really turning up right now. Again, defensive sector, market is playing defense, so utes are included. Here we've got healthcare, the third real defensive sectors, utes, healthcare and staples. Look at the relative strength. That is really starting to pick up momentum right now. That's what we see in the tail here as well. And it's actually breaking to new highs. I've drawn this overhead resistance at the close of this bar here, and we're actually resting around that, so that 140, 141 area I'm watching for support in terms of price performance, but even without the good price performance, relative strength is already very strong for the healthcare sector. And then we wrap it up with consumer discretionary, same as technology, sort of sideways, out of its uptrend, and discretionary is actually resting at long-term support in terms of relative strength. If that breaks, then very likely we got more relative strength, more downside for relative strength, and weaker consumer discretionary sector. So these were all the sectors. I'm going to wrap that up in the sector rotation model that we're going to talk about next. An update on the sector rotation model. Just as a reminder, we use the sector rotation model as was described by Sam Stovall many years ago. And on the StockCharts website, you can find it below the perf chart for the S&P sector ETFs. If you scroll down you will find the theoretical model, the theoretical framework that we're working on. Now, we have already talked about the sectors, but an essential part in the sector rotation model are 4 economic metrics that are addressed for the various stages of the economy. And I actually have a chart list. It's a public chart list. I'll put the link in the description of the video. And we're going to look at those 4 metrics and put them on the sector rotation model as well to determine where we are. So the first thing is consumer expectations. We use the University of Michigan Consumer Sentiment Index. And as you can see, that is falling, declining, or falling sharply. And these are the rules or the descriptions as they are in the model. So if you don't think it's falling sharply, it's definitely declining. So we're either in a full recovery or already in an early recession, if not in between. So we're definitely not in a recovery. So it's declining, falling sharply. So full recovery, early recession, more towards early recession, in my opinion. The second one is industrial production. And it's going up, but not very rapidly anymore. We're losing momentum here, and you can see that we're reaching the peak. So it's still rising, so it could be early recovery, but I think that we're closer to being flat, where it reaches this high here, this historical high. It's the highest level that we had for many, many years. So full recovery, early recovery, this is the only one that's still somewhere in the recovery phases. And then we have interest rates. We already looked at the 10-year. This is the 5-year. I think it's rising rapidly. So that's a full recovery. But look at where we are. We're reaching overhead resistance. We already saw that in the 10-year chart. So there's a good chance that we are going to roll over and maybe move a little bit flat. That could be peaking. So full recovery or early recession or very close to it. We're definitely not bottoming out, and we're definitely not falling. And then the final one is the yield curve. We are definitely flat at 0.19, and we are very close to being inverted. So we're not flattening out anymore, and we're also not normal. Now, if we take all that information and put it on the sector rotation model, then this is what we get. And let's quickly go over all these sectors. We had tech, discretionary, communication services, industrials. They're all weak. They're all in lagging or rotating weekly. The strong stuff is in the greens. We've got materials that's moving right into the leading quadrant. Energy, we've seen, it's the strongest. Staples, strong rotation. Healthcare, utilities, the defensive stuff. And then already real estate doing really well, and financial sort of in limbo. Combine that with consumer expectations falling sharply, industrial production somewhere between rising and flat, interest rates rising rapidly, and the yield curve flat or inverted. All in all, I think that means that the economy is somewhere between a full recovery and an early recession. Probably gearing towards early recession phase. And if you translate that to a market position, that means that we're over the top. We've had the market top and we're moving into a bear market. Now, the question, of course, is how big a bear market that will be. We've seen in the past where we had the rotation model that the bear market was a little blip, but we had some sort of a pause and a correction. And I do think that that's what's happening now. If you look at the position of those sectors, if you look at which sectors are really standing out, those are the ones that are in green, and they're perfectly aligned with a full recovery, early recession, and definitely past a market top. Are we in a bear market? I don't know, maybe not yet, but we're definitely not in a bull market anymore. So I can absolutely rule out that we're in a market bottom or a bull market. We are past that stage, and we do need some form of a correction, some form of a bear market, and we do need financial stack, discretionary, etc. to start picking up when we have the new lag in this secular bull market that is still going on. But we do need some sort of a correction, and I think the sector rotation model is pointing that out to us with the strength of the sectors as it is, and the macroeconomic metrics leaning more and more towards the early recession phase. And that wraps up Sector Spotlight for this week. Thank you for watching. And please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. Share your thoughts with any of the handles on the screen, and I'm looking forward to see you back at a new episode of Sector Spotlight next week, same time, same place.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.